Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Mike, welcome back to the show.
Oh, thanks for having me. It's great to talk with you.
With only 10 stocks really propping up the stock market, 10 particular companies, are people nervous or are they still okay with this? It used to be the Nifty 50. Now I guess it's the 10 dynamos or something like that.
Well, the Wall Street Journal had an article talking about the Fast Five, Facebook, Amazon, Microsoft, Google, and so forth, these technology stocks, and how they're themselves alone are generating the most of all the gains in the market averages this year. We saw the same thing happen in 2015, that summer, and typically that is a worrisome trend for the financial markets, because what it means is that most stocks really aren't doing much at all, and all the actions being limited to a couple. The most famous example of this is the Nifty 50 back in the 1970s, and that led to the 74 bear market. But the 2015 experience is much more closer to our own real experiences. I wasn't trading back in 1973, and probably most of the listeners were not either. But I think, we could be heading for a fall correction, most likely. But honestly, you asked, are people worried? And I can tell you, they're not worried at all. In fact, most people are pretty much have fallen asleep when it comes to the financial markets, because day by day, they're not moving very much. The VIX has been around 10 or even below 10 all year long, practically. It's actually at the lowest levels for that amount of time, going back decades. So what that means is volatility is very low, so people in the options market aren't paying up premiums of volatility, buying puts to hedge themselves. People feel like there's no need to hedge. But I really think it's a massive complacency where it doesn't seem like anything's happening, so people, are kind of falling asleep. At the beginning of the year, there was a mania in passive investing instruments of throwing money into exchange-traded funds with the idea that you don't need to try to pick out stocks, you don't need to buy a mutual fund or have professional money managers, just throw your money into the exchange-traded funds and they'll make you rich. Even Warren Buffett was promoting this idea, and we talked about that in interviews earlier this year. But there's two things I think that are important, that are happening, that really need to be paid attention to. First of all, if we go back to November when Trump first got in office, if we can all think back to those moments, those first initial weeks when the Dow blasted through 20,000, and there wasn't complacency at that moment. People were not falling asleep because there was total excitement. And I, myself, bought. I was short going into the election. We were dipping, but after the election, I went long. I liquidated all short positions and went 100% long. And I bought bank stocks, infrastructure stocks, transportation stocks. And those first weeks of the Trump victory, I went and looked at statements he had made, statements economists on his transition team had made, and even statements that people on CNBC are making. And there are predictions for big economic growth to come in this coming year, thanks to Trump and his coming tax cuts, infrastructure spending, and an expectation that this would create enough growth to accelerate the interest rate hiking cycle that had been so slow in last year, the year before. They raised interest rates once every 12 months, basically. And so it looked like we could be entering a new era of dynamic growth, at least for a period of time. I didn't think it was going to, necessarily fix all our economic problems, but I thought we could see a boost in growth that might help out the stock market. And I was looking for bank stocks to be new stock market leaders because they would benefit the most from higher interest rates. Well, here we are in June. Next week the Fed is going to meet. They are likely indeed to raise interest rates, but all these sectors that were leading back in November, December, they're now lagging. Bank stocks are even, if not down year to date. If you look at particular ones, many of them are actually down, but the sector as a whole is basically flat year to date when it was supposed to be the big leader, at least it appeared it was going to be. And this is kind of the story throughout the entire stock market, masked by, the S&P and Dow, with the help of those tech stocks you're speaking of earlier. But the point of all this is that we're not in the market environment it seemed like we were going to be in after Trump's election victory. And I think that means that a lot of people haven't adapted to that reality, and they do still think, oh, he's going to cut taxes and do this and that. But there's no evidence he's going to be able to cut taxes. He has no tax bill at all in the works. He did issue a press release a month or two ago saying he would like to lower taxes to these specific rates, but it was like a 300-word piece of paper. I know Rush Limbaugh talked about it like it was real, and other characters like on Fox News and so forth. But there's no bill, at all. It's just a press release. I think it's a stunt. And it's sort of like an illusion that we're living in the United States, where the people that really like Trump, and I got to say, I voted for him when I say this, so I'm not like some Democrat or something out just to bash him. But a lot of these people who voted for him believe all this stuff's happening, and it's really not. And at the same time, the Democrats think he's like Adolf Hitler or something. In reality, I think what's going on is nothing is happening of substance when it comes to economic issues or even health care. And the reason why nothing's happening is that the United States is basically broke. The budget is busted. And to cut taxes, they need to have a budget deal or do any meaningful, they got to do a deal on health care. And it's just too hard to do these things. So instead of actually doing things that will stimulate the economy, all we're left with when it comes to the Trump administration is rants on Twitter, maybe doing an arms deal with Saudi Arabia to make it look like you're doing something, bashing people in Europe, and creating controversies to make it appear things are happening, while the Democrats don't have plans either and are just attacking Trump, making you think he's going to be impeached or something when that's really not likely to happen at all. And so here we are, months later after the election, all the appearances of boom times to come. It's not happening, and the stock market is kind of just not moving much and just floating around for the time being. It probably will keep doing that until August or Labor Day, and then we'll see what happens then. But I think the most important financial market to watch, or the most interesting thing that is actually happening right in front of our eyes, is in the government bond market, which is also backing up the stuff I've been saying. There's no real economic boom. Now, there's a gambling website called Predict It where you can bet on political events and all sorts of things, and you can bet on whether or not Trump is going to get his tax cuts done or not, and the odds on that have collapsed to no. a 70% chance that he will be able to cut any taxes at all before the end of this year. And these are not people that are political partisans or hacks or so forth, but people who are putting up their own money in expectation of making money. And so they're betting no. Now, what's interesting about the government bond market is if you look at the yields on Treasury bonds, the yield curve is flattening out. So right now, as we're doing this interview, the yield on the 2-year government Treasury bond in the United States is 1.31%. The yield on the 5-year is only 1.74%. Yield on 10 years, 2.18%. And the yield on the 12-month is 1.17%. So there's a 1% difference between a 12-month bond and a 10-year bond. 2%, making 2.18% on your money for 10 years. It's just, a downside situation to trap your money in. But the point of this is that if we were really facing or going to benefit from an economic boom, the yields on the long-term bonds would be going up. Well, they've been going down since January the 1st, while the yields on the short-term rates have actually gone up because the Fed did succeed in raising rates once this year, and they're most likely to do it next week. But here's the important part of this is the Fed is now reaching a ceiling on how high they can raise rates because they're not going to push the 12-month rate over the 2-year rate or the 10-year rate. So we're hitting a ceiling in how high they can go. And the Fed Fund futures market, which is, again, people betting with their money, is predicting a less than 50% chance that there'll be another rate hike before the end of the year. Now, interestingly enough, over the past month, a new policy line has emerged at the Fed that's been, promoted on CNBC, and that's that, well, they might just raise rates one more time in this meeting and then tinker with their balance sheet and let some of the bonds that they bought up when they're doing all these quantitative easing programs just kind of expire worthless, and that would be a way to reduce the balance sheet. And they're promoting this notion as if this is still going to be a hawkish policy or a tightening of another fashion. Well, I think it's a smokescreen that they're going to reduce it at such a slow rate because they themselves are scared to death of a stock market decline. That what really the point of all this is, okay, the Fed's going to raise next week, but after that, this cycle of raising rates is probably nearing its end, if not at the very end. In any stock market dip of any kind, 10%, 5%, will take all future rate hikes off the table this year. Now, the ramifications for this, the obvious one, is gold, and it's bullish for gold. Gold, just this week, has been tapping on a $1,300 an ounce resistance level. If you look at the GDX ETF, which I do have a position in, it's got resistance at 24. It touched it this week too. I can't predict if it's going to go through that tomorrow or even next week, but it does seem to be in a position to break out by the end of the month. So I think this next week's Fed meeting is going to be a pivot point that will ultimately prove to be very bullish for gold and mining stocks and silver too, of course, because it's a sign that we're really nearing the end of the cycle because they're not going to take the 12-month rate higher than the 2-year rate. So that's right now, I think, actually, for the month of June, the most important development that's unfolding in front of us.
We'll have more with Mike Swanson right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Mike Swanson. Mike, do you see the British election having any influence on what's going to happen with the European economy?
I don't really think it's going to change things that much. I mean, they have already voted like a year ago to do the Brexit situation, and it's something that's just taking time to unfold. It wasn't an immediate event, and one that's going to still take a year or two more to accomplish. And whoever wins the election, I think that's still going to be the same, and that really, they're not going to, whoever wins isn't going to go away from Brexit. So, and honestly, it's probably in the best interest of England, to do it at this point. So I don't really think it's going to make a big difference. It's not something that seems to be an overhang either on the financial markets. It's much different than, let's say, the French election was, in which if the Le Pen woman had actually won, that could have been more destabilizing. But I don't really think there's any risks of radical change coming out of the election in England.
And, of course, English kept their own currency because they really didn't trust that European thing.
Well, that's right, and that was smart of them. At this point, I mean, I'm sure the people of Greece wish they kept their own currency, but there you go.
We'll have more with Mike Swanson right after this.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Mike Swanson. Mike, what do you see happening with the price of oil? It dropped over $2 a barrel today. Is that going to continue?
Well, back in March, inside the oil market, the commercial traders and hedgers have built the largest short position in the entire history of the oil market, and they tend to be right. So I think oil itself seems to have a price cap around $55 a barrel, and I don't see it getting broken anytime soon. Now, today we're down about 4%. The oil, the price of oil, which is pretty big, it's down to like $2. Oil stocks have been lagging all year to be among one of the worst sectors in the entire stock market, but they're not down huge today. They're down like less than 2%, while oil is down 4%. So that's actually a little bit of a positive, I think, for the energy stocks. But I think it's just going to take quite some time before oil itself goes into another real bull market. Now, at the same time, I think there is a bit of a floor on how low oil could drop. Probably the lows of the other year, 2016, when it went below $30 a barrel briefly. That's probably the ultimate low. In fact, when Trump went to Saudi Arabia and did his deals over there, I was reading up on the Saudi royal family and what the stuff they're trying to do with their country and the economy and how they see the oil markets and so forth. And they're actually trying to prepare for the future, decades down the road, and get off making their economy dependent on oil. whether they succeed or not is another question, but one of the things that they're looking at is the projection of where can oil prices go, and they see the $60 level as like a price top and $30 a bottom. So $30 a barrel from here is $14. We just have fallen about $8. So it's not huge if it fell that far. I mean, I don't think it's going there next week or anything, but if we have a bear market in the stock market, which I think could start this fall, then I would expect oil to continue down, and that's how commercial hedgers are betting too. And at the same time, one thing that's really gotten me by surprise is what's going on with other commodities. Agriculture commodities as a whole are trading at historic low prices. Let me repeat that for a second because it's so remarkable, but things such as corn and wheat and cotton, the agriculture commodity complex is trading at historically low prices, never before seen in the history of man. And they've been in a bear market now for 6 years. So if you look at that and look at oil, I mean, I scratch my head and wonder how low can these things actually go to? And is this some sort of like economic weakness or deflation that's somehow causing this? I mean, we got record low interest rates, or experienced that last year, I should say, when we had negative interest rates in government bonds. So we have, I think, super low commodity prices. We could be heading for low oil prices in the next 12 months. It's any sign of economic weakness or a stock market dip. But if that were to happen, it probably would be a wonderful buying opportunity to invest and prepare or start to enter, if you don't already have them, long-term positions in energy stocks that pay good dividends. So I think, you know, I don't know energy stocks, but I'm watching them, and I do want to invest in them, but it might be next year that I do it.
Mike, as always, a great show.
Thank you. It's always good talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com radio on TalkDigitalNetwork.com. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.